Welcome to this week's market drama. We'll begin here with the S&P 500, which was up 1.1% for the week. It is now up 2.5% for the year. NASDAQ was fairly flat, is still up though 3% year to date. Oil was the big surprise here with oil prices up 6.6% for the week. It is now up 9% year to date. Why was oil up so much? Well, when we look at economic data, both PMI data as well as GDP data for the fourth quarter were better than expected. PMI data gives us a more real-time picture of economic growth. It's looking at January data, and both services and manufacturing data were better than expected. Specifically, manufacturing was above 50, which means it's an expansion territory. We had not seen that in quite a bit. When it comes to GDP data, it is more backwards looking, right? It's looking at the fourth quarter of last year. Having said that, it is fairly comprehensive data, and we saw that the economy grew at 3.3% annualized here in the United States, better than the 2% expectation. The biggest driver there was consumption, or the consumer buying things, which grew at 2.8%. That does not sound like a recession, right? Which a lot of people had concerns heading into this year, considering where interest rates are today. So strong economic data that led a lot of the oil prices up. Because that means essentially stronger demand than expected from the largest economy in the world. When it comes to inflation data, we also had good news last week. PCE data, personal consumption expenditures data, came out. Core PCE, which kind of gets rid of the noise, came in better than expected at 2.9% year-over-year growth versus the last month's growth of 3.2%. 2.9 was also better than expected than the 3% that the market was looking for. So you have stronger than expected economic data. You had lower than expected inflation data. That's kind of the sweet spot, right, for the soft landing story that the market loves. So if we continue to see that, I think the markets are going to continue to react the way that they have. Next week we have. The big story is we have on the 31st, the next Fed meeting. Now, the market's not expecting the Federal Reserve to lower interest rates in this meeting. Currently, the bets are that March is the first time that they'll look to lower interest rate. There's like a 50-50 probability that the market's kind of baking in that will happen in March. But it is an important meeting because we're going to look very closely for any signs through communication, right, from the Fed around how they think about interest rates for the rest of the year. That is it for this week. Stay tuned for next week.